Hello and welcome to the Wednesday check-in brought to you by David Gockstein. I'm your host, Landy, and today is April 22nd, 2026. We're going to start by looking at Bitcoin. This is going to be a shorter video today because, well, it's supposed to be a check-in. Sometimes it goes a little bit longer, but, we are seeing Bitcoin in particular play out to some of the levels that we've talked about on Monday and the weeks prior. We'd already seen $78,000 tested. We've now seen a retest of that after trading back above $76,000. And specifically, we got that close above $76,000. And that is what I wanted to see. As I mentioned, if we got a close above 76K again, if we hadn't already tried to move up to test around 78 and above, I would be looking for a retest of the highs and above into the 78 to 80,000, 80,500 area. You could even extend that a little bit further on spot for the close, which is coming in at 80,700, but there's a common close area around 80,500 between some other support and resistance zones of interest. In this case, we saw that the Tuesday candle closed above 76K and the Wednesday candle, which of course is closed now. Still Wednesday for many of us here in the West, but we did get that move into the zone. Any kind of continuation in here, obviously 78 to 80, you can call it, or 78 to 80,500 or so. And if we start to see price move above there, specifically on a close, if we haven't already tested into the 82.5 to $83,000, I would look for that. And that's right around a big monthly area. So I would give it some room around 82.5 to 83. And any kind of closes above there for continuation. We can start looking towards, the mid 80s, 85, 86 by this weekly. Potentially even more on a very big volatile move. But I don't know. It's not really set up for a big volatile move. It's set up for a test as it stands right now, but if you do see those conditions met, if we haven't already tested up there on closes, especially above, 80,000, 80,500, I would look for tests into that low to potentially mid $80,000 area. Now, that's all conditional because if we do get a correction or rejection off of this area and then a correction down to $74,000 to $76,000, this is the zone now that the bulls need to hold. And we would see a structure change on the daily on any closes below 73, 750 or so. In this case, 741.53. That would start to point towards a move down towards the 70 to 72 as the big zone of interest there. And then, of course, anywhere below there, it's about 68 to 69K. If that were to fall apart, mean reverts all the way back to around that the top side of this major area down here now at 65K. So again, first high from 2021 was around 65. Has held up as an area of support off this most recent move off the lows. And of course, 68 to 69K right around the prior all-time high being a key area or inflection point on any kind of price action below 70K. So pretty clear setup. I did want to show the band setup as well and the confluences with moving averages. So it's going to look a little busy on the screen here, but let's kind of get rid of this. Let's zoom in a bit here on this particular structure and then turn on, we can turn on moving averages just to get a good look at where we have confluence. Now, we did see that Bitcoin headed up and poked at the upper second standard deviation. And this is why I don't see like an explosive move out of this kind of a setup, but that doesn't mean that it can't happen. But, we're not like incredibly compressed, right? We moved from a slight compression within the range to an expansion through to test very methodically the overhead resistances. And in this case, if we did get above that 80,005 to, in this case, 700 or so, that is an 800 period exponential moving average. and then look at where the upper third is. Now, this would be aggressive expansion while trading above an area of support and resistance, which would target the 200 period moving average on the daily. Yeah, we haven't seen that in a while. Now it is within, within the margin of error for an upside move, and it's right at 82.5. Swings above it right around 83. And then above there, you have the 200 period simple moving average, right around the 85 to $86,000 range. Where we have a big weekly lower high structure with a close at 86 and the swing at that 89 or so. And that's a common swing point from a prior structure that was both a swing higher low at 89 and a swing lower high at 89. So big zones overhead. Need to see 76 to 74 reclaimed on any rejection here. And then, of course, right around that 73 on the swings of the lows, you can call it 73,750 to 73,800 would break the downtrend on any closes and wouldn't look great on swings. But that is also where the basis band is. We got the 55 period right around that 70 to 72 zone down there where the lower first is coming in. So we have a lot of confluences. Bitcoin's kind of trapped in between support and resistance. Now it's all about, do we get that continuation into test the 78 to 80K area and possibly above? Or do we get a rejection here and correct back down towards that 74 to 76, see if it holds. If not, starting to look back towards that 70 to 72. Just take the methodical approach, watch it in lower term time frames, and see how the daily closes go from here. So that's Bitcoin out of the way. Let's check on something that you're not going to see a lot of, but you will get some instances of, and that is where we had equities, commodities, and crypto all pumping on Tuesday, or on Wednesday's candle. Sorry. In that case, let's go take a look at WTI. That's just crypto. I don't know why I clicked on that again. There's commodities. It kind of shuffles the list around. It's annoying based on your most recent that you've selected on TradingView. But in this case, we have seen a daily reclaim. I said to watch out for this. We had a daily reclaim of the 90 to 95 area on WTI. Now, a little bit of an update from kind of the fundamentals side of things. I'm not going to get too deep into this. Maybe I can this can be an evolving discussion as the situation evolves. But price is king first. But because oil is so sensitive to supply and demand, we have a situation now that is, kind of been talked about already. I've talked about it across various Spaces events and during the live streams with David on the breakdown or Money in Politics, as he's been doing lately. What we have is the supply chain has readjusted, right? There is other ways to get oil, but there is a gap because of the time gap of when deliveries were and also ships that are still on the other side of the strait unable to get out, or for various reasons, right? Whether that be insurance reasons, whether it be security reasons, whatever it is, considering the situation there. We have seen now tankers are going around different routes. There's a lot of tankers coming into the United States, but it takes time to essentially get that oil onto those ships. And then there is the transit time, which is, for even ships leaving the Gulf of America right now, is weeks in some cases, right? Depending on where they're going, give or take. But it's going to be weeks, right? And during that time period, you then have reserves in various nations that are being drawn down, right? So as the reserves are being drawn down, it drives the price of that oil up, right? Because of various factors, reserves being drawn down, it's more scarce, it drives prices up. But this also could have it will have an effect on the overall market because it's a lagging effect, right? And some countries are in better positions than others, but it raises the floor price for oil globally. Even though we have a fractured market where Brent is trading significantly over, WTI, we're likely going to continue to see that price rise as we have strain on that supply chain and we have drawdown within those reserves for various nations. Now, obviously, the U.S. is in a bit better position, but even the U.S. can only fill so much, and then of course we consume as well. So you're likely going to see some drawdown. There was some drawdown from the SPR. We're likely going to see some drawdown from reserves to prevent prices from absolutely rocketing up. But it's about that time delay, right? And that will cause prices to rise again. It's just about it's a matter of what areas of interest does it recover for price and how long it's going to take. Like some analysts estimate that this could drag out in terms of the effect, the lagging effect, and then, just to make up ground for reserves, that's automatically more demand on the supply, right? And then you also have to consider that there's the time delay for even getting that there and then making up, to rebuild reserves, right? Which we're not it's still in reserve drawdown for most nations, right? So what we need to watch out for is, even because of the time delay, looking all the way out into summer, right? By some analyst estimates. And then we have to watch what the reserves are, the onshore reserves are for various nations, and kind of keep a close eye on it as it relates to price action. Because if WTI continues up, right, above 90 to 95 on any reclaims, the next big area overhead here is 98 to 102.5, and then above there 105 to 107. It starts to break out above there. It's all about 112 to 115, right? So any reclaims of 115 is where we start to see expansion within this overhead resistance zone between 115 and 130 for WTI. For Brent, which I'm not going to pull up right this moment because I do want to make this a little bit quicker, we'd be looking at the zone that was held around the $92 region to $95 region. Well, the overhead resistance there in the main area would be 115 to 140 and potentially even into the 150s because they're stacked resistance zones overhead. And those are very viable targets to the upside as we monitor what's going on with reserve supplies. Some are taking worst case scenarios. Others are pushing back with that's not quite where we're at. But it's all about, nations reporting during their economic reporting what their reserves are, right? So, price will be king, and price will tell us what the truth is. And in this case, I've said, people were talking about like over $200 to $250 oil very early on. And I said, that's just not viable right away. Over the long term, if there is, some major supply chain hiccups, because all it takes is one straw to kind of break the camel's back in that regard. Could we eventually see crazy prices? Absolutely. I mean, there's nothing saying that we couldn't, but I think that, even if the strait was fully reopened right now, this problem still exists, right? So because we have a drawdown in national reserves for many nations, right? So there is an energy crunch. And will it come home to roost in terms of oil prices continuing to rise globally? Many would say yes. And I would say yes as well. But we'll see what kind of mitigating factors there are that come up along the way. And just keep a close eye on it because, as I've mentioned, you need to pay attention to oil as it relates to Dixie. Now, we did get a day where oil was up, Dixie was up, commodities were up, gold and silver was up, you had crypto up, you had equities up. But the reality is that's not going to maintain. In fact, when looking at traditional markets, you see that, Dow closed up, but it just hit our resistance line that we've had here for quite some time at 49,621. And it needs to break above there and start really cracking into the 50K region, to, of course, go run the high. But it's rejecting right around the range highs prior to putting in the all-time high there. And to get continuation, it would need to head up. Now, if we continue to see oil head up and Dixie strengthen more, the dollar trade, then what we would eventually see is this go into the correction that we've been looking for. I think it needs to correct. I think NASDAQ needs to correct. SPY needs to correct, right? And I think at this point, there would be healthy corrections provided they maintain that lower low by putting in a higher low on a higher term time frame like a weekly, which I think is much more likely than not. In this case, what I'd be looking for now is, trading below essentially 48.9, 49K for Dow to start heading down to, 48.5, 48.4. And then it's all about, the upper 47 to 48K region before getting to this big weekly zone where the daily basis band is. And that's around the low 47 to mid 47 region. So 47, essentially 47, 250 to 47.5, anywhere below there. And it's going to go down and hit the top side structure at the next major area in the upper 46s to mid 46 area, potentially even going for the weekly down there. Now, NASDAQ, and this is where I think that what we're seeing is the last part of a risk trade that's going to rotate to risk off if we continue to see oil push up, which there's no reason for it not to. We still have tankers arriving in the United States, both in the Gulf of the United States and the Gulf of America, rather, and the Gulf states in the United States and Alaska as well. And we've got, crews that are working, extra shifts and overtime, basically 24/7, to actually, get the onshore oil onto those ships. We're probably looking at, a continued onslaught of tankers coming in and still, those departing having quite a long journey. So that would lead me to believe that we have a correction and a larger one sooner rather than later. And we're seeing that in the risk trade. Like we had Dow head up and, of course, spike the overhead resistance, which was assisted by the stocks that are also common with NASDAQ here, which did make a new higher high. Beautiful, almost hitting 27K at 26,942. Now, if it drops the low at, 26.4, we're looking right back to, 25.8 around there to 26.2 as a primary support zone. But if it loses that, it's probably going to mean revert to 25 to 25.5 or so. And then, that 25 is down by the basis band. Anywhere below there, it's testing the top side structure right around the weekly in the 24 to 24.5 region. And I think, when looking at SPY, not getting that continuation above its prior swing high, its all-time high, but NASDAQ doing so, I think we're nearing the potential wrapping up. Maybe not right now, maybe not tomorrow or the next day, but we're fairly close, I think, to a correction. If it drops around the 702 region, look to 695 to 690, anywhere below there, 685 to 680, and then it's all about 675. You might remember I was talking all about 675 being the inflection point over here. If it drops it, we're going to drop down. That's exactly what we saw. Anywhere below there, we're looking all the way down into the 650, 660 area for SPY. And that would be a healthy correction. It's all about holding the current low side structures, though, on longer time frames, not just liquidity sweeps. So, on weekly closes, essentially. Now, I think a correction from here would be healthy. Got to go find got to go hit the bids or find the bids, right? Now, that doesn't mean that we can't get continuation forward, even in an environment with oil and Dixie rising, but I think it would be shorter lived if you do continue to see oil and Dixie rising. And that's the point of today, and I kind of want to put that out there. Obviously, we're going to follow up with this on Friday, on the Friday wrap-up at 9 p.m. Eastern, 6 p.m. Pacific Standard Time. And I will, we'll see where things close actually on the weeklies, because I think it is going to be important. Obviously, we went from lower low to higher high, so you'd be looking for higher lows on any correction as the first primary thing, and then we'll evaluate where those levels could potentially be. Obviously, they're going to be around the areas that I just discussed, but we'll see where things close at this Friday. We do have FOMC next week. We've got some other economic data and stuff coming out as well. And I believe, will get some onshore oil metrics for how much we got going on here in the United States and other countries here pretty soon. If we've had some come in already, but yeah, and then just watch Bitcoin carefully around this overhead resistance at 78 to around 80,000, 80,500 region. Keep a close eye on oil and Dixie, as I do think it will erode the bid on risk if it continues to head up, and especially if we start to see WTI testing into that 98 to 102.5. I think that's when you're going to see a risk to risk off rotation. So, and I think much needed. So I will be back here on Friday to discuss all of that with you on the Friday wrap up. And then, of course, you can catch me on David Gokhstein's show, The Breakdown, or Money in Politics, at 12:30 p.m. Eastern Standard Time, 9:30 p.m. or 9:30 p.m. 9:30 a.m. Pacific Standard Time, every weekday. So look forward to seeing you there. Have a lot of fun chatting with the audience and obviously chatting with David. And like and share this out there if you did find this information helpful. And I look forward to talking to you again on Friday. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all that being said, Landy out. Take care.